We're glad to have you back here watching Business Week. Up next is the interview segment.
On Focus today, we take a look at opportunities that exist in a downward market environment. Discussing this with me is Mr. Lucky Deba. He's a dealer from Qual Invest Capital Limited. Lucky, welcome.
Oh, thank you.
When trading at the exchange, gets weak and market prices are down, companies are also losing revenue, what should a forward-looking investor do at that time?
Well, the capital market being a long-term market, what to do as a forward-looking investor, especially investors that have a long-term horizon, they have two strategies to pursue. First of all, they can pursue an averaging strategy. As the market is going down, the prices are going down, they can be buying in piecemeal to average their carrying cost of their investments. So let's say by the time you keep on buying at a lower price, your average cost of carrying that investment will reduce. And by the time the market recovers, you see within a short while, you'll be in profit because you're able to bring down your average cost. Then the other strategy an investor can pursue in a downward trending market, well, the investor can decide to, especially when they have a forecast, the market will still drop further, he can even sell and take some losses, and at support level, he can come in and buy additional security with the same value of money. By the time the market recover whatever loss he has made and still be in profit. Mind you, it's a long-term market, and no trend exists forever. After some time, you see support and there will be trend reversal.
Let's talk about a market being a long-term one. What is the idea of long-term? How long is the long-term?
Well, the idea of a long-term is that the instruments are not redeemable, which is the shares. The only window the investor has is to sell to another investor. And probably two is because they are variable rate investment in terms of equity. What you see is that the long term is typically pattern along the business cycle, which could be a period of 6-7 years, could be a period of thereabout 6-7 years, 5 years. So you see a typical business cycle can run within 6 to 7 years. So when you say technically long term, we're looking at 6-7 years at least.
Okay. This idea that you should buy stock when the prices are down so that you sell at a premium when it's higher, is it always the case, or there are occasions when prices are up and you see so many people following the up prices?
Well, depend on the kind of investor you are. You may be a momentum investor, a momentum trader, pursuing momentum strategy. You buy stock that are appreciating in prices. Now, in such cases, you see, even when the prices are going up, you see investor still believes that these companies are doing well. That is why the prices are going up. So they still invest in anticipation that they keep on the pace of the performance. So based on that, you see investors buying when the prices are going up. On the other angle to it, there are value investors whereby the stock prices are going down. They have done the fundamental analysis. They see the stock commands value. They will still buy. It's all depending on the kind of strategy the investor is pursuing in the market.
Let's look at staying, at the long term in the stock market. What benefits does an investor get, playing the stock market?
Well, there are a lot of benefits an investor gets from playing in the stock market. Globally, on average, the equity market has always performed the fixed income market in terms of return. Beside the general return perspective that the stock market are on the long term, stock market will perform the fixed income market. They are like your dividend you get, the investor gets dividend. The other benefit the investor gets, the investors sometimes gets bonus issuance. Then capital appreciation. Take for example, some stocks in our markets here today, like a Guaranteed Trust Bank. When they were listed at a very low price. But some of those stocks has returned over 100%. And I don't think that stock has have been listed average of say 25, 28 years. But the growth rate of capital appreciation, if you factor in bonus issue, it should be over 300%. So those are the kind of benefits you get from investing in the market, going long on the market. Beside your dividend and bonus you receive from your investment. Now there are investors that still plays the market on a short-term basis. Now we call them speculator. This group of investors make their living from speculating on shares, on the price of shares. So in the long term, they buy at a low, they sell at a high. So they earn a capital gain spread. So they make money from the market too.
There's always this idea that an investor should consult a professional or an analyst to look at the market and then advise him before putting money on. I ask the question, can an investor sue his advisor or his analyst after being led to purchase a particular stock or do some investment that turns out to be in red and he loses money?
Well, depend on the particular circumstance. Now, an investor, a professional in the market belongs to a professional organization, is aware that there are procedures he must follow through in making investment recommendation, making investment advice, taking investment action on behalf of the client. Now, especially for you making investment recommendation, there must be an adequate research, a reasonable base supported by adequate research. Where the advisor did not follow this process, the investor can write to the professional body which the analyst belongs, and if they find out, carry out investigation based on that they didn't follow the ideal process in making investment research or recommendations to clients, then the professional body can discipline the analyst. Then on the other way around, it's not too clear legally in Nigeria where an investment advisor gives an investment recommendation and did not do his due diligence, and the recommendation was not supported by adequate research.
But do you think it is that easy for an investor to understand and come to a point to accuse the advisor that he didn't do good research?
Well, fine. It's difficult for the investors to understand, but that's why the capital market is regulated. The regulators specify the quality of professionals that operate in the market. So now we have cases whereby investors make complaints to a professional body and they look at the investors. Ordinarily, before as advisors, before especially retail investor, we want to understand the investor's objectives, risk and return objective, so that we can, and its constraints, so that we can advise him appropriately. Ideally, what we do is that we provide the investors, we try to understand its return, its risk objective, and put them in a statement called the investor's policy statement. So based on this, what is stated in this policy statement, we now advise what he should invest in and where not to invest. For example, let's say a 75-year-old man, I can't tell him to put money in an IPO of a startup or an IPO of, say, a company that is not well established, because the cash flow will still be very risky, or I cannot allocate 80% of his fund to a variable return instrument. So in that case, I use the investor's age, his own circumstances, his wealth, and his own return objective. Typically, an investor of 70 needs current income to sustain itself. So based on the data I've collected in the policy, it will guide what the kind of investment recommendation I will recommend to the client. However, where I recommend give him a recommendation that is not suitable for his circumstance, in that case, the client can write my professional body, and if possible, they can even discipline me.
Let's leave it there, Mr. Jeba. Thank you for coming on the show.
A pleasure.
I've been speaking with Mr. Lucky Jeba, who is a dealer with Qual Invest Capital Limited. Back to you.
And that's it for Business Week. I leave you with the graphics of commodities market. Join us again same time next week for a fresh edition. I am Yemisi Lanredo.